Namaste. Good morning. We'll do the last two questions and move on to the next area. Mr. Ram, working as a CEO of a company, provides you the following information. He transferred the following asset. Residential house in Bangalore, which he had purchased in 2006-7 for 1556, he transferred for 1 crore 45 lakhs. Listed shares of Indian company purchased before 31/1/2018. For all asset purchased before 31/1/2018, I can take the fair market value prevailing on that date. I told you yesterday itself what is the uniqueness of that date. I can take the fair market value prevailing on 31/1/18, which should not exceed full value of consideration. However, if the actual cost is more, you can take actual cost. So what we will do is, we will compare full value of consideration, fair market value as on 31/1/18. Amongst this, whichever is less. This answer with cost of acquisition, whichever is more. Whichever is more. So, cost of acquisition is 1 lakh. Fair market value is 190. Sale consideration is 5 lakh. 5 lakh or 190, whichever is less, 190. That answer with 1 lakh, whichever is more, so 190 will be the preferred one. 190 will be the preferred one. Unlisted shares purchased in May 20. Purchased in May 20 at a cost of 50,000. Value as per approved method for the shares amounted to 110. And it is sold for 95,000. Okay. It is purchased in May 20. For unlisted shares, 2 years is the 24 months is the period for short term. So up to May 22, it should be a short term. It is sold in Feb 22, so it is a short term capital asset. Units of equity oriented fund purchased in May 19. So this fair market value as on 31st March 18 does not have any significance. Only for asset purchased, the shares purchased before 31/1/18, that's a significance. Units of debt oriented fund purchased in January 16, okay, and sold now. Mr. Ram made the following investment. Residential flats, this is 54, this is 54 EC. Compute the total income and tax liability. If his gross salary is 24 lakhs, interest on fixed deposit is 1 lakh. Assume that he has contributed 150 to PPF, 52 to medical insurance for ensuring the health of his parents being senior citizen. First, we will do the capital gains part, then go to the total income. First, separately as a working note, I am doing for house property because that has exemptions, etc. Asset combined. May I know for 6-7 what is the indexation for 2006-7? 122. 120. So 6 months condition, always keep verifying for 54 EC. In this case, yes, it has been made, but generally ensure to verify that whether the investment has been made within 6 months. Are you clear? Okay. May I move on? May I move on? I'm now moving to the next two, that is listed shares and equity oriented funds. Repeating, for shares purchased before 31/1/18, the two steps are full value of consideration or fair market value as on 31/1/18. Check which is lower, because law says it cannot exceed full value of consideration. So 1,90,000. That with actual consideration, whichever is higher, again 190 stays. Of course, in this, first 1 lakh is not taxable, balance is taxable at 10%. Now, for unlisted shares, I want to recollect to you section 50CA. Okay, full value of consideration will be actual sale value or fair market value. Yesterday we saw proportionate net worth method. Whenever you want to sell unlisted shares, especially private limited, you have to first write to the company. You cannot just like that free transferability kadayad. Okay, you have to write to the company. The company will tell you what value of shares by an approved method. Section rule 111 UA and all tells us how to value, like taking stamp value, etc. How we did our slum sales. So in that manner, they will determine the net worth and tell you what is the value. If so, section 50 CA of the law says, if you sell unlisted shares, full value of consideration will be actual sale value or fair market value by the approved method, whichever is higher. In this case, 1,10,000. For debentures, bonds, no benefit of indexation. No benefit of indexation for debentures and bonds. Unlisted shares are sold within 24 months, so no benefit of indexation. Gross salary in the question is 24 lakhs. Standard deduction 50,000. My gross total income comes to 29,63,400. Since it is fixed deposit interest, TTA cannot be claimed. For a senior citizen, if the assessee is a senior citizen, TTB of 50,000 can be claimed. TTA is for non-senior citizen, only for savings bank interest. Yeah, fine. You are saying that it might result in surcharge. That's why you're saying.
4,10,000, right? Actually, it is 5,10,000.
That's what I'm saying.
10%?
Yeah. While computing tax, you will reduce that 1 lakh. You are saying that because suppose this is 49 lakh 50,000. Had I not reduced that 49, it would have been 5950 in, I mean, 50/50, in which case surcharge will come. I understand that concept, but marginal relief la the set off ஆயிடும், அதனால தான் அங்கேயே reduce பண்ணிட்டேன். But you are right, you can put 5,10,000 while computing tax, you can reduce that 1 lakh. May I? Okay. So, if all capital gains question comes, this is okay. This is how. Air Tubes Private Limited went into liquidation on 1st June. The company was seized and possessed the following funds prior to the distribution to shareholders: share capital, reserves, cash in hand. There are 5 equal shareholders, each of whom received 5 lakhs from the liquidator in full settlement. The shareholder desirous of to invest the resultant element in the 54 EC. You are required to examine the various issues and advise the shareholder of their tax liability. Whenever a company goes into liquidation, because this question couple of times they have asked in the past, you need to remember that distribution of reserves is dividend and not for the asset. This 3 lakhs belong to the shareholder. This 3 lakhs belongs to the shareholder. So, and I'm not saying it is not taxable. It is taxable under IFOS. It is taxable under IFOS. 5 equal shareholders means each of them will get 60,000 rupees, which is taxable as dividend under IFOS. Which is taxable as dividend under IFOS. Full value of consideration for the share surrender. For the company, taxation does not arise. Liquidation of a company and distribution of assets to shareholders. Liquidation of a company and distribution of assets to shareholders for the company, capital gain does not arise. It is not a transfer. Partition of HUF is not a transfer, but dissolution of a firm, that 45(4), it becomes a transfer. So, coming back, for a company, this is not a transfer, no capital gain, only for the individual shareholder, because he is surrendering the shares to the company and getting some consideration. Okay, so 25 lakhs is the cash surplus available with the company, which will be distributed to the 5 shareholders. Each shareholder will get 5 lakhs. Of that, dividend is 60,000. So, for the shares, he is supposed to have received 4,40,000. He is supposed to have received 4,40,000 for the shares. Minus ICOA or cost of acquisition if it is short term will give the capital gain per shareholder. Am I clear to you? Okay. Once more, I am repeating the provision. In the case of liquidation, let's write it down also. For this purpose, full value of consideration will be fair market value of any asset that I receive plus monetary consideration minus any proportionate share of reserves, because when you distribute reserves, that becomes dividend. Now coming to this question. Okay. So up to 60,000, whatever you distribute to the shareholders will be treated as dividend. It will not be taxable as capital gain dividend. Is this clear? Is this clear? Okay. So this has appeared once or twice. Okay. But again, before winding up the capital gain, I would definitely tell you the most probable area of question is going to be only slump sales or distribution of asset to partners on reconstitution or liquidation. Otherwise, it will be very simple and straightforward question like compulsory acquisition or conversion of stock in trade. Okay, and there were no major case laws that were there. Okay, so that will also not be very challenging. So this is what we feel that it will be asked. November 22 RTP, my dear friends. November 22 RTP, you need not have it, just look into it, that is enough. Okay, you will be able to answer very easily. You will be able to answer very easily. They asked in slum sales. Just listen. ABTC Limited has two units, Unit A and Unit B, both of which commenced operation in 2015, which means it is a long-term unit. The result is going to be long-term. It sold the unit on slum sales basis on 1/7 for 1.45 crores. FMV2 is 1.45 crores. FMV2 is 1.45 crores. Unit B is engaged in specified business of operating warehouse facility for storage of sugar and has claimed deduction under 35 AD in earlier previous year for eligible asset. Okay. Unit B is a 35 AD specified business. Land ku claim pannirpaangala? No. So it is not applicable. For building they would have claimed. For plant and machinery, they would have claimed. All these things will now have a book balance of 0. All these things will have a book balance of 0. Okay? Remember. On 1/7/21, the following particulars are available. Land, they would not have claimed. But I can take the stamp value 95 lakhs. So I am first taking FMV1 95 lakhs. FMV1. Building 60 lakhs. Or building 0, sorry. They would have claimed 100%. No, that is for net worth computation. 95, 60, 12, unsecured loan 15, current liabilities 5, 20, revaluation reserve will not be considered as a liability at all. So my FMV1 will be 95 plus 60 plus 12 minus 20. 147. Okay. Remember, FMV1 is 140, 1.47. FMV2 is 1.45. So I will take 1.47 as my full value of consideration. I will take a 1.47. Now I will work out net worth and see. Now I will work out net worth and see. Land, ignoring revaluation. Revaluation is 6. So it's only 74. Building is 0 because I would have claimed under 35 AD. The book value will be 0. The book value will be 0. Debtors 12 minus 20 will be 66. So 1.47 minus 66, because you cannot claim any indexation benefit. 81 is the LTCG. Okay, LT1 is the LTCG. Am I clear to you? Okay, right. What is the amount of capital gain? 81 lakhs D. Okay. Oh, avladhan question eva. Okay, 81 lakhs. Na edo varsiya knowledge ke poranga nenchen. Okay, amount of capital gains 81 lakhs. Please remember this. ஏதாவது ஒரு அசத்துக்கு 35 AD claim பண்ணிட்டோம்னா அதோட book value 0. Because 100% would have been claimed. 100% would have been claimed as deduction. So the book value would have been 0. Am I clear to you? Okay, right? So this is the capital gains question that was there in the November RTP also. Okay, so I always feel 54B most popular, or 45 4 la test panla 9B and 45 4, which we will do in assessment of firm. So with that, you will be able to answer the capital gain question. No major case laws are there in capital gain that needs to be, that has not been tested. It has already been tested. So standalone question on capital gains for 4 or 5 marks, or last time slum sales was the first question. Okay, they had A, B, C, D, some 5 questions from there. Okay, whatever it is, you will be able to answer. Okay, with this, I go to assessment of firm. With this, I go to assessment of firm. With this, I go to assessment of firm. Okay, shall we move on? Assessment of firm, some theoretical aspect first. Any transfer of a capital asset or intangible asset by a private limited or unlisted company to a LLP, or any transfer of shares or shares held in a company by a shareholder in accordance with section 56 and 57 of LLP Act shall not be regarded as transfer for the purpose of levy of capital gain. Explain the provision. Conversion of unlisted or private limited company into LLP will not be considered as transfer provided the following conditions are satisfied. All assets and liabilities should be transferred at book value. All the shareholders should become partners, and their profit sharing should be in the same proportion in which they held the shares. The profit sharing should be in the same proportion in which they held the shares. Fourth point, no monetary consideration. They should not get any monetary consideration. The turnover of the company should not have exceeded 60 lakhs and the net worth should not exceed 5 crores. If these conditions are satisfied, then it is not regarded as transfer. If these conditions are satisfied, then it will not be regarded as transfer. Am I clear to you? Okay, right? So these are all the conditions for not taxing of a private limited or unlisted public company getting into LLP. I'm not repeating because it is there in the, I'm not writing because it is there in the theory material I gave you. You can just refer. The partnership deed of a firm does not specify the remuneration payable to each individual working partner, but lays down whatever is said in the act. Okay, whatever is said in the act, I have as it is pasted, which is what we all practically do also. Why to have as per deed, as per law, two different things? What we technically try to do is, we all paste whatever is there in the act as a, is this sufficient or should I specify the quantum? Is this sufficient compliance or should I specify the quantum? The answer is this is sufficient. This is sufficient. Anil hardware case, where you need not specify the quantum. You need not specify the quantum. Okay. Can the firm claim deduction for remuneration? Yes is my answer. Yes is the answer. Anil hardware case. In case where a partnership deed does not specify the remuneration payable to each individual working partner, but lays down the manner of fixing the remuneration, would the assessee be entitled to the deduction? The manner of fixing the remuneration has been specified. The assessee is entitled to claim the remuneration. He need not quantify 1 lakh per month, 50,000 per month in quantify panamana based upon profits. I am paying. Only if the partnership deed is silent, no remuneration is payable. Only if the deed is silent, no remuneration is payable. So for this, the Anil Hardware case is the okay. I'll take this example and tell you something. Examination question. That is the year in which Anil Hardware judgment came. Immediately followed by this examination question. Let me be very clear to you that our institute uses somewhere around 14 as the font size and spacing is minimum of 2. So if you look at this question, this will go for 1 full page in our institute question paper. 1 full page will be this question paper. Actually, we will get really an answer other chinnadu. Okay. Because that's the judgment Anil Hardware gave. But we will always get that feeling of fear when we read such a lengthy question. In the case of books or book profit of the firm, up to 3 lakhs, 150 or 90%, whichever is higher, balance 60% shall be computed as defined under Income Tax Act. In case there is a loss in the particular year, the partner shall not be eligible to any remuneration. Remuneration is payable to the working partner should be credited to the respective account of the worker shall be entitled to. Can the firm claim deduction in respect of remuneration? That's where the question is. Nothing but Anil Hardware said you need not quantify. But reading the question will always be fearful. Majority of the case law questions are so. How the examination answers. We have to go back to our 5th standard to 10th standard or even up to 12th standard. We are following a basis. Okay, write the question again. Okay, nama economics la pannuvom. Okay, sir, najmave facts. Nama suggested answers paranga. Facts. They will write the question again. Analysis, conclusion. The analysis kum conclusion kum vandu vyathyasam kedadu. But state the obvious is the examination criteria. Okay, they want this to be presented in a style. So please follow that facts, analysis and conclusion. Fact is whatever is there in the question. Analysis is can remuneration be paid if the partnership deed is silent. Conclusion is Anil Hardware case. Okay, right. Question number 3. X and Co, a partnership firm consisting of 3 partners, enhanced working partner's salary from 1st October to 50,000 from the existing 25,000 to each partner. My dear friends, where there is an amendment to the deed, either in terms of interest or in terms of remuneration, it will only have prospective effect, not retrospective effect. They might have amended it with effect from 1st April, but for us, it will only have a prospective effect. Now, as per deed, 3 partners, okay, 25,000 into 3 into 6 for the first 6 months, 50,000 into 3 and for the next 6 months. This is what is as per deed. We cannot take 50,000 into 3 into 12. Any amendment will only have a prospective effect and not a retrospective effect. The assessing officer during the course of assessment contended that the remuneration paid to the working partners 50,000 for each partner as excessive and applied 40A subsection 2. Is this correct? No. Great City Manufacturing Company, where the law itself specifies what is the fair market value, you cannot disallow something saying citing 40A subsection 2. 40B the other standard. Even though the payment as statutory prescribed under 40B. The assessing officer also disallowed the remuneration from 1st of April to 30th September. Decide on the correctness of the assessing officer. Okay, right? Unwritten law. Okay, personally to you, unwritten law. Okay, somehow we always feel assessing officer is wrong. Questions are drafted so. The assessing officer content so. அப்படின்னா நீங்க ஒரு மாதிரி assessing officer ஏன்னா நாம தான் புத்திசாலி. Okay, you in FR or in your accounting standards question I have seen the accountant of the company contents அப்படின்னா அவன் வேணும் accountant, நாம chartered accountant. Okay, first part of the question deals with, okay, can the AO invoke 40A subsection 2 for partners remuneration? No. Am I clear to you? St and Co. A partnership was dissolved as per the dissolution deed with effect from 18th September. One of the partners took over the entire business of the firm in his individual capacity, including the assets and liabilities, and he paid the other partners due. He then continued as a sole proprietor. The assessee, relying upon section 78(2), claimed the set-off of losses of the earlier firm as an individual. This is not inheritance. என்னெல்லாம் இன்ஹெரிட்டன்ஸ்னு சொல்றேன்? Amalgamation, demerger, conversion of partnership firm into a company, conversion of an unlisted company or a private limited company into LLP. Conversion of a firm into sole proprietor is not inheritance. Number one. Number two, the fundamental rule of loss is loss can be carried forward and adjusted only by the same person who incurred it. Loss can be carried forward and adjusted by the same person who incurred it. Exception is these cases which I told you. So even in this case, even it might be a genuine case where the partner has taken over all the liabilities, also settled all the other partners and continuing the same business. But still, you cannot carry forward or you cannot enjoy the benefit of carry forward. Okay. There will be a case law of Pradeep Kumar where it will be mentioned. Pramod Mittal, sorry. Pramod Mittal. This is the case. Okay. Pramod Mittal is the case. Can the loss suffered by an erstwhile firm which was dissolved be carried forward or set off by the individual partner who took over the business of the firm as a sole proprietor, considering it as succession? The partnership firm was dissolved and takeover of the running business of the firm by the erstwhile partners was not the case of succession by inheritance. I told you what are all inheritance. Hence, the carry forward of loss of the firm is not allowed. Okay. Please remember, even in the case of a dissolution of a firm, retirement of a partner, even in the case of a retirement or death of a partner, section 78 says, loss pertaining to the deceased or retiring partner cannot be carried forward by the firm. ஒரே ஒரு பார்ட்னர் போனா கூட அந்த பார்ட்னரோட லாஸ் ஷேர் ஆஃப் லாஸ் of the partner who has retired or who is dead cannot be carried forward by the firm. If that is the provision, imagine the firm itself is dissolved. Just because one partner has taken, even though the genuine case, he has taken over all liabilities, settled all the partners, now it is no more a firm, it is a sole proprietary organization. Those two are different. It is taxable as individual, that as a firm. Loss can be carried forward only by the same person. So it is Pramod Mittal case. The answer is no. Yeah, answer is yes. Assessing officer is right. You cannot carry forward. That no is, yeah, yeah. Raja Kailash inherited as a co-owner plinth which he offered to tax under house property. AO tax the income under the same head but treating as all co-owners as AOP. No. If the individual shares of the co-owners are available, if the individual shares of the co-owners are available, then it needs to be taxed in their individual hands and not in the hands and not treating them as AOP. And plinth is not a house property. Plinth is not a house property. Sudhir Nagpal is the case. Okay, Sudhir Nagpal is the case. Okay, under which head rental income of plinth is taxable. Income from property consisting of land and building thereto is only taxable in IHP. Letting out of plinth is assessable under IFOS and not under IHP. That is the first thing. Second, in the case the co-owners had inherited the property and there was nothing to show that they had acted as an AOP, thus the High Court held rental income from plinth has to be assessed in the hands of the individual and not as AOP. And not as AOP. Generally itself, if the shares are very clearly specified, husband and wife are the co-owners of a house property. ரெண்டு பேரும் IHP claim பண்ணலாம். 50-50 share, 65-35 share, like that, if there is a very clear. Only if it is not clear, it will be carrying on. Okay. Partners introduced capital into the firm. The partners were unable to specify the source of such investment. AO proceeded against the firm, which is wrong. Which is the mistake the AO did. Firm has explained from whom they got the money. Firm had unexplained cash credit இல்லையே. Firm has explained that they received the money from the partners. Only the partners are unable to explain their source of income. So there is only the AO is wrong in proceeding against the firm. He could have only proceeded against the partners. May I? Before progressing to the next area, let me tell you when you should remember to compute AMT. When you should remember to compute AMT. If it is a non-corporate assessee, it is not a company. So individuals firm LLP. Individuals, firms, LLP. For them only AMT is applicable. If you are claiming 10 AA or if you are claiming 35 AD or if you are claiming 80I to 80R, you are supposed to do AMT. Once more repeating. When you are liable to claim AMT, if you are claiming 10 AA, this is an exemption. This is an expenditure. This is a deduction. If a non-corporate assessee, firm, LLP, individual, is claiming exemption under 10 AA or expenditure under 35 AD or income-based deduction under 80I to 80R, then you are also supposed to work out AMT, alternative minimum tax. In my normal tax working, I will give these three benefits. 10 AA, export profit will be allowed as exemption. How to find out export profit? Total profit into export turnover by total turnover. Total profit into ET by TT. Export profit is not what I have exported, but what foreign currency I have brought in, because for that only I am giving this deduction. Okay, this is one thing. First 5 years 100% of export profit, next 5 years 50% of export profit, last 5 years transfer of reserves rule, leave it. 35 AD, specified business, except land, goodwill and financial instrument, all the assets can be claimed as deduction. I will add it back. Since I have claimed asset as a deduction, I would not have claimed depreciation. Now, since I am adding back, I will be allowed the depreciation. I will be allowed the depreciation. 80 IAIB for that infrastructure industries, 100% power, roads, railways, all these things, 100% of deduct. Wherever you are claiming these things, you need to add them back. Reduce the depreciation for 35 AD, you will get adjusted total income, ATI. A non-corporate assessee is liable to pay either normal tax or 18.5% of ATI, adjusted total income, whichever is higher. Where he is paying as per AMT, difference between AMT and normal tax is known as tax credit, which he can carry forward and adjust it over next 15 years against normal tax payable. This is the provision of AMT. This is the provision of AMT. So keeping that in our mind, we are approaching the next question. PQR, a LLP partnership set up in the special economic zone in the financial year 1718. 1718, 1819, 1920, 2021, 2122, we are in the 5th year. We are in the 5th year, so 100% I can claim. The unit fulfills all conditions of 10 AA. During the last year, it has also commenced constructing a warehouse in the district of Tamil Nadu for storage of agricultural produce, fulfilling all conditions of 35 AD. Capital expenditure in case of warehouse is 75 lakhs, including land 10 lakhs. So only 65 lakhs, that is warehouse means building. The warehouse became operational during the current year and the expenditure. The relevant details for this year 21-22, sorry, 21-22 are profits of unit located in SEZ, export turnover, domestic turnover, profit from operation of warehousing facility before considering 35 AD, compute income tax. இப்படிதான் கொடுப்பாங்க. நாம தான் AMTU சேர்த்து compute tax payable. Whenever these three are available for a non-corporate assessee, we need to also do AMT. Read through. Welcome. Computation of adjusted total income. Total income as per normal provisions after allowing all deductions, expenditure and exemptions. So, sir, the plant and machinery manufacturing the warehouse தானே சார். And 115 JC formatல additional depreciation. Manufacturing
Manufacturing and exporting.
For 10 AA. Okay, that they would have claimed in total income itself, no? 10 35 AD தான் add back asset reduce. Manufacturing and exporting நீங்க 10 AA ல பேசுறீங்க. அதுல வந்து நான் அசட்டோட வேல்யூ ஆடே பண்ணலையே. அது ஆஃப்டர் டிடக்டிங் அடிஷனல் டிப்ரிசியேஷன். ஓகே, நான் தான் சொல்லியிருக்கேன்ல, ஸ்டூடெண்ட்டாக தான் யோசிக்கணும், நீங்க கண்ணா பின்னாலாம் யோசிக்க கூடாது. Firm are always taxed at 30%. Firms are always taxed at 30%. Surcharge at 12% where the income exceeds 1 crore. Normal income did not exceed, but ATI exceeded. So here it will be 0, here it will be into 12%. So whenever these three are claimed, please remember to work out AMT. The intention of the examiner at that time is to test you on AMT. ABC Private Limited was converted into a LLP, ABC LLP, on 1st August. You are provided with the following particulars of the private limited on the preceding March. Unabsorbed depreciation, business loss relating to 15-16, unadjusted MAT credit, WDV of assets, plant and machinery, WDV market value, plant and machinery which is claimed under 35 AD, building, VRS compensation paid in 1920. Explain the tax treatment of each of the above said items in the hands of LLP, assuming the conversion satisfies all conditions laid down under 47. All assets and liabilities are transferred at book values. All the shareholders becomes the all the partners in their shareholding proportion. No monetary consideration. 60 lakhs, 5 crores. Those are all the conditions. Now, based upon this, we need to work out this. Okay. Can the unabsorbed depreciation be carried forward by the LLP? The company's unabsorbed depreciation, can it be? Yes. Business loss of financial year 15-16, 16-17, 17-18, 18-19, 19-20, 20-21, 21-22. I mean 2020. 5 years is over. Now the LLP can carry forward for the remaining 3 years. The loss of the erstwhile company can be carried forward for the balance period. Okay. Unadjusted MAT credit lost. You cannot carry forward it. LLP MAT nu compute panna maatom. The way of computing MAT and AMT are two different things. So this is permanently lost. All assets has to be taken over at the book value. Whenever I say book value, it is book value as per income tax law, not as per your books of accounts. So plant and machinery, I will take over at 10 lakhs. The other plant and machinery, the value will be zero because 35 AD is claimed. Building, I will take over at 45 lakhs. This apart, the law says, in the case of succession, provisions will apply to the transferee entity as it would have applied to the transfer or entity had the event not happened. So, in 1920, they have claimed 25 lakhs, they have incurred VRS. 1920, 2021, the company would have claimed 5 lakhs, 5 lakhs. The remaining 15 lakhs has to be carried forward by the firm and claimed in 21, 22, 22, 23, 22, 24. Okay. Apart from this, there is a beautiful aspect in this question called proportionate depreciation, because the conversion took place on 1st of August. Okay, I start my answer from there. When is this concept applicable? Concept of proportionate depreciation, when it is where two entities has to claim depreciation for the same asset. For the same asset, two entities has to claim depreciation in the previous year. Then depreciation will be first computed and then distributed between both entities on effective usage period, on the basis of effective usage period. April to July. That is April 30 days, May 31, July 30, June 30, July 31. 122 days. This divided by 365 into 122. This is what the company can claim. This is known as proportionate depreciation. Addition, deletion இருந்தாலும் addition before conversion இதே மாதிரி தான் compute பண்ணும் for eligible days. Addition after conversion அது வந்து not used by both the entities. Only the entity which is using can claim that depreciation. Assets which are used by both the entities only will be. Am I clear to you? Okay. Now the other parts of the answer. Unabsorbed depreciation can be carried forward by the LLP and set off against any income. Okay, set off against any income. Business loss. DRS 35 DD தான் DDA 35 DDA. May I? Yeah, sure. May I? Yeah, tell me. On 1st April, Binu Limited, a domestic company engaged in the business of manufacturing metro rail seats. Additional depreciation. Converted into LLP by name Messrs. Soumya LLP, fulfilling all conditions. Some of the relevant information as on 31/3/21 are VRS expenditure 20 lakhs. The company has been following the regulations. So the company would have claimed 4 plus 4, 8 lakhs, 1920, 2021. Now I have to claim for this year another 4 lakhs. The LLP will claim. 150 equity shares of Toyo Limited, an Indian company listed in Bombay Stock Exchange, was purchased on 31/7/18. Okay, so for Soumya Limited, this becomes the shares now. Cost of acquisition is cost to the previous owner. So the previous owner being Binu Limited, they have acquired it for 1900, 31/7. So எனக்கு வந்து after what 31/1/18 அதனால FMV வேண்டாம். Besides other assets transferred to Messrs. Soumya, Binu Limited also transferred 2 factory buildings. One building was leased out with plant, machinery and furniture at a consolidated rent of 50,000. This is taxable in IFOS. Your main business is manufacturing. Composite rent. Building matra rent, house property. Rent for all things put together. Composite rent, taxable under IFOS. All related expenditure, including depreciation, can be claimed. During the previous year, Soumya Limited earned a profit of, I'll just give you, after debiting or crediting the following items. Mr. Binu is a working partner of the LLP. He is also a working partner in another firm. Actively engaged in business hour, Binu paid a salary of 55,000 as per the deal. Mr. Ayushman, an employee, was deputed to work in the client office in Mumbai for 3 months. The LLP has paid his salary 40,000 per month in cash for the months when he was in Mumbai. Since he does not have a bank account in Mumbai, the payment was included in salary allowed. Rule 6 DD exemption. As I told you, when the law was, when an employee is temporarily posted outside the base location, there you can pay him in cash. Amount of 25,000 was paid towards penalty for non-fulfillment of delivery conditions of a contract. Yeah, it is not a penalty. It is breach of contract, more like a compensation allowed. The LLP has provided amount of 18 lakhs being the sum estimated as payable to workers based on agreement to be entered with workers' unions towards periodical wage revision. The provision is based on fair estimation and reasonable certainty. Allowed. ICDS 10. Okay. Some amounts are missing. Just give me some time. I'll give you the amount. Depreciation. Gratuity provision add back. Actual gratuity reduce. Profit on sale of Messrs. Toyo Limited shares. These shares were sold for 2750. The highest price being on 31/1. This is not required by me because the shares were acquired after 31/1. Repairs to plant and machinery include 59,000 in respect of plant and machinery given on lease. I need to add this back in my business profit and reduce. Business profit add back panna solrena, then only you will get the book profit for computing remuneration. This is not a business expenditure. This is IFOS. It can be claimed, but claim it under IFOS. Factory license fees, 15,000 for each factory. One factory is licensed, we have to add it back in business and claim it in IFOS. Legal fees, 26,000 for drafting lease agreement. Add it back and claim it under IFOS. Additional information. Under an agreement of debt restructuring, the bank has converted unpaid interest amounting to 9 lakhs up to 31,700 into a new loan repayable in 3 equal installments. The first installment was paid. 43B la இதை நம்ம disallow பண்ணிருப்போம். In the 9 lakhs, in those respective years, we would have disallowed it under 43B. The law says in the year of payment, we should allow it. So in this year, I have paid 3 lakhs, 3 annual installments. So this year, I should reduce 3 lakhs. This year, I should reduce 3 lakhs. Mr. Binu, being a working partner, purchased a car which is registered in his own name but out of the funds of LLP. The car was used exclusively for the purpose of LLP. The depreciation on car amounted to 59,000, which is not included in the depreciation debited in the P&L. Please, wherever I have not changed the date, please, 21/22. Is a claim padlama? Yes. Okay. A Sivakami and Co. Beneficial ownership is the concept. Okay. We can claim. Depreciation as per income tax law, 8,10,000, including depreciation on the leased out asset that you can claim only in IFOS, does not include depreciation of car. The LLP sold import entitlement 150. The sum is not included in the P&L. It is part of business income. You are required to discuss and compute the total income. Read through. We will do that. Toyo Limited share sale is capital gains. Okay, this is not my main business. We are in. So we have business income, capital gains, IFOS. 3 heads. Okay. எப்பயுமே தனித்தனி ஒர்க்கிங் நோட்டா போட்டுட்டு கன்சாலிடேட்டடா ஆன்சர் கொடுக்கலாம். Okay. Business income, separate working note, where we have to find out the book profit and the allowable remuneration also to one of the partners. Second, separately we will do capital gains, separately we will do IFOS, then compute the total income. Okay, right? The time you spend on the question should be more so that the answer will be smaller. Always the time you, okay, virtually see the answer once what we are going to do and then start always. Okay, now sorry, I'm just taking some random numbers. The mistake is I did not type. Okay, so during the previous year earned a profit of let us take some 30 lakhs. Let us take some 30 lakhs as profit. This is just a random number I am taking. And fifth adjustment, okay, depreciation. Fifth adjustment, depreciation. Let's take 10 lakhs. Just random numbers, 10 lakhs. First, I am computing business income. First, I am computing business income. It is sold for 2750. It was purchased for 1900, 150 shares. Now, please remember the following to be provided. VRS compensation incurred by the company in 1920, and the company has claimed 2 installments, balance to be claimed by LLP in 3 installments. Interest, which would have been disallowed under 43B in the earlier years, will be allowed on the basis of actual payment. This year, 1/3 of the installment is paid. So ஆமா, one 15,000 is business, another 15,000 is IF. Twenty-nine lakh 37,500 I'm getting. Is this correct? Okay. Majority of the provisions are PGBP that we are revising. Majority are only PGBP provisions, which is understandable. Question has only asked us to compute the total income. Of course, you know how to compute the tax for the LTCG part. Only 10% on 27,500 for the remaining 30%. Yeah. For one factory, it is taxable under, it is allowed as a deduction under business or profession. That I have not added back while computing my business income. Only 15,000 added back, and that is reduced here. Am I clear to you? Am I clear to you? This is again a very interesting question. X, Y, and a HUF of Z. It is not Z who is a partner. It is the HUF is the partner, Z is a representative. Because if interest is paid to Z, it is covered under 40A subsection 2, not 40B. Not 40B. Okay. Is engaged in the production of television, film, serials, and for the previous year ended 2021, one partner A retired, but his dues are settled only in 21-22. The sharing was equal before the retirement as well. The earlier partnership deed did not authorize payment of remuneration or interest to partners. The partnership deed was revised from 1st June 21 to authorize the remuneration of 1 lakh per month to each working partner and interest 15% on their capitals only for X and Y. You can pay only for 10 months because it is revised from 1st June prospectively only and not retrospectively. The profit and loss account shows a net profit of 10 lakhs after debiting or crediting the following. Interest of 7.5 lakhs for each partner was paid to X and Y on the balance for the full year at 15%. I will allow only 12% for 10 months. 12% for 10 months. Remuneration 30 lakhs. Nothing but 1 lakh into 3 partners into 10 months. Interest amounting to 2 lakhs was paid to Z on loan provided by him in his individual capacity allowed. Up to 18% allow பண்ணுங்க. 40A2 எழுதி no disallowance. It is assumed that it is as per fair market value, so it is allowed. Royalty of 5 lakhs paid to partner X, who is a literature and a professional scriptwriter, for use of his script as per the agreement between the firm and X will be also treated as remuneration. எல்லா பார்ட்னருக்கும் ஏதாவது ஒரு ஸ்கில் இருக்கும். You cannot pay remuneration separately and for the skill set separately. Remuneration means salary, bonus, commission, Any other payment of similar nature, incentive, anything, every partner will have a skill set. I cannot be allowing for those things. So this 5 lakhs will also come under 40B, not under anything else.
So this will, how is the application period?
Yeah,
That will come under 184.
let it. That's what I'm saying. Then what is the purpose of 40B? Another partner, very good in accounts, I am paying him remuneration or royalty. Another partner, very good in management. He is also a management consultant. I am paying him commission. I deduct tax. Then 40B loses its importance. So you cannot, any payment. Yeah, it's the same thing. You cannot pay a partner anything extra. House கொடுக்கிறார் அதுக்கு rent வேற. But ஒரு special skill set இருக்கு. For that I am paying more. Make it in the deed itself. I have never said that remuneration should be only in this ratio. I have just said this is the maximum remuneration. As per books you charge it. That is different. Two separate payment 18,000 and 9,000 made in cash on the same day. Disallowed. Morning and evening pay panna on a single day to a particular person in excess of 10,000. The whole of such payment is disallowed. Examination question. எல்லாத்துலயும் 40A2 வரும், எல்லாத்துலயும் 40A3 வரும், 43B adjustments வேற இல்ல. Okay, so against the bill for services rendered and two payments of 9,000 and 10,000 on 1st and 2nd February, not at disallowed, allowed, because it has not exceeded 10,000 on a single day. Amount of 5 lakhs provided in the books as liability for a film artist and a non-resident. Tax is deducted and deposited, allowed. Oh, sorry, tax are deducted only at the time of payment, which is 3rd June, disallowed. Sorry, 100% disallowed. Tax needs to be deducted before 31st March. At the time of credit itself, tax needs to be deducted. Okay, and I'll come down and have. Please have, this is we celebrate Golu in our institute. Find time to go and see the Golu room also. These people have made a lot of jobs. நீ எனக்கு அதை வச்சுட்டு அப்படி yeah. Okay, so 100% disallowed. 100% disallowed. Am I clear to you? Okay. Amount of 6 lakhs provided as gratuity, add back gratuity 150. Okay, எல்லா questionலயும் படிக்கிறோம் இந்த adjustments. Okay, 70% of the question you know the answer. Only 30% makes you to, okay, have some disturbance. 1.2 lakhs received as income tax refund. This will not be a business income. This is IFOS. Interest on income tax refund is IFOS. The firm also provided the following. Brought forward business loss 30 lakhs. One partner retire ஆயிருக்கு. His portion of loss, the business cannot be brought forward. 30 lakhs up to 2021. There were 4 partners, X, Y, Z and A. A has retired, so 1/4 of the loss is lost, remaining 3/4 only can be taken. Whereas that provision is not for unabsorbed depreciation, only for business loss. Unabsorbed depreciation you can claim fully. Okay, the amount due to partner A was 15 lakhs, balance standing in the capital account. Balance standing in his capital account, amount due na adana partner ke before making any adjustment. The dues were settled during the current year by transferring a plot of land purchased a year back. எதுக்காக இது கொடுக்கறான்னா அது short term. Purchased a year back, having book value of 10 lakhs, the fair market value is 21 lakhs. Okay. 9B 45(4). 9B says if you transfer the asset or stock to partner or any person, the fair market value will be taken as the sale full value of consideration or sale value minus இது வந்து taxable. 45(4) says any payment in excess of the capital account shall be treated as capital gains. Okay, both these and both these things 9B seri 45(4) seri in the year of distribution. In the year of distribution only it is taxable. So that is what this question is. Okay. Every adjustment we know, it is how we do. When you are doing business or profession, forget about that 45(4). ஏன்னா back of the mind 45(4) ஓடி இருந்ததுன்னா you will be making small mistakes in business or profession. Whereas when we come to 45(4), we'll understand. First we will do business or profession. We'll take the break after this question. No, sir. Loss can be carried forward only by that person. So if the other firm cannot carry forward it, that's what I'm coming to say. Sorry, the retaining partner can set off that loss in that year. It is apportioned. Any other business income, he can set it off. He can set it off. Set off. He cannot carry forward also. He can, that year alone, he can set off. Okay.
Will that loss be covered for that?
Technically, no, because remuneration and the interest, there cannot be an expenditure which cannot be claimed. But there is no selected case law for that. I think you can claim and see. In the examination, don't do that. In practically, you can do that. Okay. நான் வந்து ஒரு 5 இயர்ஸா சண்டை போட்டிருந்தேன். இந்த என்னுடைய எங்கிட்ட ஆர்டிகல்ஸ் பண்ணவங்கலாம் இப்போ ஃபேர்மில் தே ஆர் ரன்னிங் தேர் ஓன் ஃபேர்ம். அவங்க எங்கிட்ட சொல்லுவாங்க 40B the remuneration which they receive, which they compute, they offer it under 44ADA, saying 50% of the remuneration. நான் சொன்னேன் ரெமியூனரேஷன்லயும் இன்ட்ரெஸ்ட்லயும் கிளைமே பண்ண முடியாது. ஒரிசா ஹைகோர்ட் ஜட்ஜ்மெண்ட் ஒன்னு காமிச்சாங்க. வேற நான் சொன்னேன் ரெக்கார்ட்லாம் பண்ணக்கூடாது. So coming back, okay.
The proportion of loss distributed is on the basis of the
profit sharing ratio
on that date, sir.
On that date, on the
day of
yes sir.
So what if they make an amendment to the proportion?
இது மாதிரி தான் பண்ணி தானே 45(4) ன்னு ஒன்னு கொண்டு வந்திருக்கான். இந்த மாதிரி விளையாடி தான் நீங்க வந்து லாவை காம்ப்ளிகேட் பண்ணிட்டீங்க. 45(4) and 9B உடைய வேர்டிங்ஸ் தெரியுமா? Distribution of assets to partners at the time of ஒழுங்கா முன்னாடி dissolution தான் இருந்தது, or reconstitution. Reconstitution includes change in the profit sharing ratio. அவனுக்கு தெரியும் பின்னாடி 07 தோனி வருவான்னு. ஓகே. Okay, let's go one by one. Interest 7.5 lakhs to partner X and Y for the full year at 15% they have paid. Okay, interest paid is 7.5 into 2. Okay, 7 lakh 50,000 into 2, 15 lakhs. Therefore, capital will be 15 lakhs divided by 15%. They have paid it at 15%. They have paid it, okay. Allowable interest at 12% for 10 months as deed is amended with the effect from 1st June. So this 15 lakhs I need to add back 1 crore into 12% into 10 by 12. Okay, I take this opportunity to tell you one more thing. Suppose if they give you interest on current account, fully disallowed. Only interest on capital is allowed. When they have a fixed capital and a current account interest will not be allowed. Only capital. அது ரொம்ப முன்னாடி ஒரு வாட்டி வந்திருந்தது. Yeah.
All these items are debited or credited in the P&L. Actual gratuity would have actually been reduced.
No, or whenever there is a provision, it will be adjusted only against the provision. That's an unwritten law, yeah. When you have a provision, you will not create a provision again at the time of expenditure, you will not charge it. When it will be adjusted, with, that need not be said, it has to be understood. As per Act, 5857 minus 3 lakhs into 60% plus 2,70,000. So whichever is less, this is allowed. The next arena to understand is how do we compute capital gains in this question? How to compute the capital gains in this question? For that, you need to understand section 9b and 45.4. Section 9b says asset or stock transferred to a partner on dissolution or reconstitution, taking the fair market value, compute the capital gains or business profit, sale if it is stock in trade. That is 9b, which is normal provision. And then comes 45.4. The interesting thing is, in both the cases, it is the firm which is taxable. And in both the cases, in the year of distribution only, it becomes taxable. So we'll start with capital gains. Computation of capital gains, section 45, subsection 4, using the provision of section 45, subsection 4. Asset distributed to the retiring partner, 21 lakhs. Monetary consideration paid, nothing, less balance in capital account, less balance in capital account. Opening balance 10 lakhs, opening balance 15 lakhs, sorry. Share of profit on land transferred, 11 lakhs divided by 4. Is this 3,25,000 a short-term capital gain or long-term capital gain? It depends upon to which asset we are appropriating this. If it is appropriated towards a long-term capital asset, long-term capital gain. If it is appropriated to a depreciable asset or self-acquired goodwill, short-term capital. If nothing is specified, short-term. If nothing is specified, if no other appropriation is specified, it is short-term. 39 lakh 2000.
What is the criteria for apportionment which you said?
Yeah, I'll do that. I'll do that. Next question, we are having it only for that.
21 lakhs and 21 lakh.
One is for transfer of asset. Second is for paying a partner more than what he is eligible to. I should divide by 4. No. Profit only should be apportioned to the partner. For this 11 lakhs, I have paid the tax. Okay. This 21, you mean to say it's dually taxed? Yeah. Amo. You're correct. Why will you pay a partner who has only due of 17 lakh 75,000 21 lakhs? Maximum your argument can be let the partner pay tax for that. I agree with you. Am I clear to you? Okay, right. Radha, Radhika and Rati are equal partners of a firm. The capital account balances are 15, 20 and 30 respectively. Radhika decides to retire from the firm and the other two decided to continue. Radhika was paid 1 crore as full and final settlement of her capital and other balance. For the purpose of enabling cash flow for settling the partner, the firm had sold land which was purchased in 2001-2 for 3 lakhs and it was sold for 1 crore. This is the 9B. Compute the capital gains taxable in the hands of the firm. Okay. Compute the principle of attribution and its effect in the following circumstances. All cases are mutually exclusive. Case 1. The firm had 2 other lands purchased 5 years before, which were revalued upward as 30 and 50 respectively. So whatever I am going to get, why should I pay the partner more? Because of this reason. So I am going to attribute it to these 2 lands. Both are long-term capital, purchased 5 years before. Both are long-term. First we will do this case and then go to case B, case C. Okay. Okay. This is the theory. Okay. What is the basis of classification on how to determine the nature of gain? In the case of deemed transfer, distribution of short-term capital asset, depreciable asset and self-generated goodwill, the gain arising is the short-term, otherwise long-term. For the purpose of 48.3, where the amount chargeable to income tax as income under 45.4, distribution to partners, the specified entity, firm or AOP, shall attribute such amount to capital asset remaining with the specified in the entity in the following manner. Where the surplus relates to revaluation of capital asset on the basis of registered value or report, valuation of goodwill, valuation of any other self-generated asset. The attribution proportion will be surplus, that is whatever is the for gain, into revaluation divided by total revaluation. Okay, where the surplus amount paid over and above the capital balance does not relate to any revaluation or self-generated, attribution shall not be made. Shall not be made at all. That's what we saw in the last question. Where the surplus amount paid over and above the capital balance relates to only to capital asset, distribution to the specific attribution shall not be made. That is, if there is no registered valuer reports or anything. Can revaluation given effect to? No, it cannot be given effect to. Okay, but when the asset is sold, it shall be reduced from full value of consideration. That's what I am going to talk now. Okay, right. First, let me calculate the 9B capital gains, which is common for all the cases.
Sir, in this theory, the theory, there is a line. Yeah. Similarly, for self-generated goodwill and self-generated assets, they should not be recognized in the books of account.
Yeah.
What is
3 years purchase of 5 years profit. You calculated and credited to partners capital account, the retaining partners. Can it be recognized in the books as goodwill? You can recognize in your books of accounts, not for income tax law. Here I am working out little detail than the last question. Last question I just gave you one brief idea. Here I have given you law, no surcharge, etc. So I am working out little detailed solution. Well,
consider the total income?
yeah.
That
Anyhow, LTCG is taxable at 20%. You will tax it separately.
Let me go above 1 crore.
That's why the question has given assume no such charge.
Ignore.
Ignore such. Okay. Now, please understand why we did this. Okay. As per books of accounts, what will happen? Okay. Sale value of land 1 crore less cost 3 lakhs. Okay. Tax 18 lakh 82 192. Profit available for distribution to partners 1 crore minus 3 lakhs minus 1882. So 78 lakh 17,808. The problem here is what is meant by share of profit. We should be very strong in that. Share of profit means after paying taxes, which will be distributed to the partners, which is not taxable in the hands of the partners. Which is not taxable in the hands of the partners. Repeating, share of profit means after paying taxes. Okay. So in this case, this is share of profit. Okay. This is share of profit. I think they are equal partners. So share of profit per partner Am I clear to you? Okay. Computation of capital gains as per section 45 subsection 4. Computation of capital gains as per section 45 subsection 4. Monetary consideration paid to retiring partner. Monetary consideration paid to retiring partner 1 crore less opening balance in capital account whether is this long-term capital gain or short-term capital gain. Let's go case-wise and understand. Let's go case-wise and understand. Case A. The whole of the capital gain is apportioned to land which is long term. Hence, the capital gain computed is also long term. Do you understand this? In case A, we have said the firm had two other lands purchased 5 years back before, which were revalued as 30. So, purchased 5 years back, both are long-term capital assets. So, the resulting gain is a long-term capital gain. The resulting gain, apportionment to land 1 and land 2 in the ratio of revaluation. In the ratio of revaluation, that is 3:5. That is 3:5. So, land 1 apportionment will be this into 3/8. Land 2 apportionment will be this minus this. Are you understanding this? Are you understanding this, my dear friends? Okay, case A, case B. Okay, right. Ipo, we will answer one question. Can I increase the land value? Can this apportionment given effect to in books? Answer is no. You cannot revalue. Revaluation is never a concept. Revaluation is never a concept under income tax law. You cannot revalue. Then what happens? When these lands are actually sold, full value of consideration will be reduced by the already apportioned amount. That is the only thing. Full value, you are not increasing the COA. Okay, suppose this land 1 is sold for 60 lakhs. 60 lakhs minus 774 will be taken as full value of consideration and you will compute the capital. You cannot give effect to revaluation in the books. Let us be very clear. When it is subsequently sold, you can reduce it. That's all.
How will the firm remember that?
The question is, how will the firm remember that value? I accept it your question. In the year of 45-4, we file a specific form for that. Automatically, every year it is reflected in the income tax form itself now. 26 years, specify panno. In that year where you are paying tax, you need to apportion. And you will definitely bring it. Okay. So, how will the firm remember it? Leave it to the auditor. Adani. Can I? Can I? Second case. The firm had a land which was purchased for 5 years, revalued upward by 30 lakhs, and the depreciable asset which is revalued upward by 20 lakhs. So this 53 lakh 94,064 capital gains is apportionable in the ratio of 3:2. 3 is long-term capital gain, 2 is short-term capital gain. Again the same principle. Depreciable asset value and increase panna mudiyadu. When the depreciable asset is sold, you should reduce it. Am I clear to you? Okay.
Certificate required from bank.
No, we assume that it has been obtained. Okay. If it is not obtained, entirely short-term capital gain.
And depreciable asset is allowed to be revalued.
Yes, building can be revalued. Patents or trademarks can be revalued. It will have a better value today. So obviously it will. But the effect of revaluation cannot be given. The partner will demand for revaluation so that he gets the money, but the effect cannot be given in the books of accounts. The firm has a depreciable asset which is revalued upward by 20 lakhs and self-generated goodwill. So 2:3. This is STCG. Okay. Okay. Fully STCG. Fully STCG. Sorry. Fully STCG. Okay. So that's how the answer goes by. The same question is there in the amendment.
We need to compute that because we need to carry that amount.
Yeah, exactly. You need to compute 2:3 ratio and keep it. Okay. The answer is there in the amendment lectures also. Please check it. Okay. So that I'm not wasting time on the same question.
Last point.
Yeah, sure. Now, my dear friends, assessment of companies. Well,
Please use mic.
yeah, the problem is if I use the mic, this whole road is blocked. Because by using the mic, I am not talking less at a lower decibel. I still talk. Okay, PC sir once told me, if you use mic, nobody will pay fees for your class. I asked why, because they can stand there and take the notes there itself. Basically, I'm a dramatist, so I have always been shouting loud, and that has been a practice. And taking class when Mike was not 20-25 years, It has its own, it's a depreciable asset. You know? So, அதுக்காக அவர் சாந்தி பூஷன் லெவல்ல நான் பேசல. Okay, now assessment of companies. What are all the two specific provisions which you should remember before going into this? One is 115 BBD, that is for a company if they have invested in another foreign company 26% or more. That other foreign company is known as specified foreign company. In the 26% we can relate to in transfer pricing also. Who is an associated enterprise? 26%. So there is a relationship. And if you look at our BEPS rules, okay, to make them to bring back the profit, BEPS are suggested, OECD norms are suggested, keep the tax rates low so that they bring back the plow back the profits into India. So I have invested, so the dividend I receive from this company is taxable only at 15%. The dividend I receive from this company is taxable only at 15%, and I cannot claim any expenses whenever the tax rates are low. Okay, and then there is, this is not only for companies, but 115F, 115G, this is carbon credit royalty for developed in India, 10% the rate of tax. Provided no expenses are claimed, nothing is benefited. So BBF, BBG. Okay, that is okay. Whenever we are speaking about 115, when we do a question, I will come to these provisions. Okay, and
Sir, what is carbon credit?
for pollution-free industries, the government gives a certificate which is transferable. That is known as carbon credit.
If they sell it, then the amount they receive, they'll only pay 10%.
Yeah, they'll pay only 10%.
Or on the gain. Okay.
On the no amount of,
Complete will be gain.
yeah, so zero is the cost. Yeah. Okay. The other provision which I want to tell you is about buyback of shares. Is about buyback of shares, my dear friends. Taxable in the hands of the company. Buyback of shares is taxable in the hands of the company only. Okay, is taxable when they issue shares and when they buy it back. Difference between buyback price and issue price will be considered as income. Company will pay 20% tax on that. Okay, no indexation, nothing. 20% tax on that, which is obviously exempt in the hands of the shareholder. Since the company is paying the tax, 1034A exemption is available to the shareholder. Now, we all know about book profit. Okay, how to remember, how to compute 115 JB book profit. How to remember this? First four items are known as apportionment, transfer to reserves, dividend, okay, transfer to reserves, dividend, provision for taxation. Okay, remember, provision for taxation is a apportionment, appropriation of profit, and sometimes if it is transfer from reserve, reduce it. The first the first four items are with regard to apportionment, income tax, all types of income tax, which will also include deferred tax if it is debited, transfer to reserve, dividend. All the four are apportionment. All the four are apportionment. If it is a income, you should credit, I mean, you should reduce it. This is part A. The next two items are provisions. The next three items are provision. Provision for contingent items. Provision for contingent items, contingent liability. Provision for diminution in the value of investment. ஏனா உங்களுடைய accounting standard la, if it is a permanent diminution, you can create the provision, but income tax law does not allow it. Provision for loss of subsidiary company. Okay, in this case there is a case law, old case law, XJ forgings. In this case there is a old case law of XJ forgings which said provision for gratuity is not a contingent provision. It is based upon scientific manner, actuarial valuation, so it should not be treated as contingent provision. XJ forgings. So please write and keep it somewhere that in XJ forgings it is held. In XJ forgings it is held. Provision for gratuity is not a contingent provision. Actually, we have completed 10 items. Okay, 4 are apportionment and their 2 incomes, deferred tax and transfer from reserves. 3 provisions, profit of sick industrial undertaking. Now comes the major difference, okay, that is exempt income. Income exempt na expenses will not be allowed. So add expenses, reduce income normally. Here I am going to tax that in 115 JB. So expenses pertaining to income exempt under section 10, only section 10, 10AA will not be here. Agricultural income, அது book profit liye exempt, MAT provision liye அது exempt. Okay, share of profit from a firm for a company can be a partner in a firm. Share of profit from a firm exempt. 115 JB liye exempt. அதுக்கு ஏதா expenses இருந்ததுன்னா add பண்ணி. Okay, share of profit from a firm is said in section 10 subsection 2. Share of profit from AOP is said in 86. அதனால அது ஒரு extra line item. It is not said in 10. Share of profit from a firm is said in section 10. Share of profit from section 10 is said in, share of profit from a firm is said in section 10, whereas share of profit from AOP is said in 86. அதனால தனி line item. Royalty, இது taxable 10%. Okay, logically யோசிக்கலாமா? You are supposed to pay tax either at normal rate, which is 10%, or 115 JB 15%, whichever is high na. அப்புறம் ஏன் இந்த provision? Okay, when the law itself says it is taxable at 10%, pay 15% னு சொல்லக்கூடாது. So royalty 115 BBF I will reduce, that expenses I will add back. 2 types of income for a foreign company is taxable at less than 15%. 2 types of income for a foreign company are taxable at less than 15%. Royalty and fees for technical service. 15 CACB la நீங்க கொடுத்திருப்பீங்க. Okay, 10% தான் அதுக்கு tax. Interest from infrastructure. Interest from infrastructure 5% தான் அதுக்கு tax. When you say 5% is only the tax or pay MAT, doesn't sound well. So income of a foreign company which is taxable at a rate lesser than 15%, I will reduce, expenses add back. notional gain on transfer of units of REIT, notional loss add back, depreciation ignoring the revaluation. Okay, so this is totally இதுவரைக்கும் 10 items இருக்கும். 5 incomes, 5 expenditure, because people say how to remember 24. You have to remember only 12. The other is the opposite effect. Okay, depreciation ignoring revaluation. Income tax law never recognizes revaluation. I am not saying add back depreciation as per books, reduce depreciation as per income tax law சொல்லல. Depreciation add back and ignore the revaluation, same in the books of accounts. Do it. Brought forward loss or unabsorbed depreciation, whichever is less as per books of account. With this, part A is over.
This depreciation is not as per block of assets. Only book.
As per books,
Company
ignoring the revaluation. This is part A. இதுக்கு அப்புறத்துலேருந்து 115 JB2, 2A, 2B, 2C. What is 2? Normally brought forward loss or unabsorbed depreciation, whichever is less. But if a company's application is pending under IBC in NCLT, then the law says take both unabsorbed depreciation, brought forward loss and unabsorbed depreciation, not just the or. It is and. Then comes our Ind AS adjustment. Our Ind AS financials, we stop at a level of net profit and then make adjustment, which is popularly known as OCI. Which is popularly known as OCI. Okay, those things are taken. Other comprehensive, inga vandu add pannom income. Remember, revaluation is never a concept under income tax law. Amount credited to OCI in the statement of P&L and amount debited to will be reduced. This will not include revaluation arising to tangible asset, intangible asset, financial instruments. Demerger adjustment, I haven't seen question. 1/5 of transition reserve, not to include these things. This is what is 115 JB format. Read through once.
Presumptive business க்கு நம்ம கம்மியான presumptive business.
Presumptive computation is not available for companies and LLP. Books maintain பண்ணி தான் ஆகணும்.
Plus நம்ம பின்னாடி ships, flights அதெல்லாம் presumptive 5%, 7%.
Foreign companies க்கு தான அது. Foreign companies foreign companies applicable. அது presumptive computation இல்ல, அது mandatory computation. அவங்களுக்குலாம் இங்க notwithstanding clause அது. Notwithstanding anything contained. So அங்கதான் அதுதான் அப்படிதான் கம்ப்யூட் பண்ணுவாங்க மேட் அப்ளிகபிள்.
இப்ப நம்ம மேட்ல அவங்களுக்கு கொஞ்சம்
ஆஹா.
அந்த
ஆமா. அவங்களுக்கு வந்து புக்ஸ் ஆஃப் அக்கவுண்ட்ஸ்னு ஒன்று கிடையாது. வாட் இஸ் த டிராவல் இதெல்லாம் தான். டோட்டல் ஃபீஸ் கலெக்டட் இன்டு so much.
பிசினஸ் லாஸ் ஆர் அன்அப்சர்வ்ட் டெப்ரிசியேஷன் cumulative அதான் பார்க்கணும், இயர் ஆன் இயர் பார்க்கணும்.
Cumulative, yeah, cumulative. His question is, if we have business loss and unabsorbed depreciation for 3 years, what should I do year to year? No. Total the business loss, total the unabsorbed depreciation, whichever is less. Okay.
Rational behind. What is the rational behind?
No big rational. Books of accounts ல இருக்கிறதை எப்பயுமே நம்ம இக்னோர் பண்ணிடுவோம். அதனால there is no specification because depreciation rates can be your own rates. Minimum rate is only prescribed. Okay, my dear friends, one question we nail off assessment of companies and other. Okay, not an examination question, but let us understand all the provisions. Jarjit Limited is in the business of hospitality, running resorts and hotels. The following informations are provided to you. Compute the income of the company along with tax liability and other provision. Net profit, provision for taxation. Net profit includes net profit from a new hospital which is eligible under 35 AD. Dividend, depreciation, including 3.75 on revaluation. Deferred tax liability. Loss of subsidiary company, provision for gratuity, expenses incurred on higher study of director's son. Company has undertaken a village for CSR. Technical fees paid to subsidiary company for product design and development. Unfortunately, the company failed to deduct tax at source in February when the payment was made. However, knowing the error, it was deducted in April 22. 8.1 further understood that FMV of such service is only 5.2. Legal expenses in defending suit. Guarantee commission paid to a director for extending personal guarantee. Interest on overdraft for payment of interim dividend. Diminution in the value of investment. Provision for bonus. 80% of the bonus were paid in September. Balance the employees were not traceable and they have left the employment. Company reversed it in the previous year. Sales promotion expenses included cost of neon signboard put all over the country 1.9. Out of this, you also understand that 20,000 was paid in cash on a single day. VRS compensation paid to 11 employees who opted during the year. It's in crores. About 2 lakhs. Feasibility study conducted for expanding into new areas of treatment but resulted in a failure. Cost of transformer, company has incurred the cost but the transformer is given to the state electricity board. Regularization fees paid for violation in construction. Donation to PM NRF. Dividend received from foreign company investment. Interest on bank deposit. Profit on sale of land. Additional information. Gratuity actually paid 35 lakh which was adjusted against the provision. Plant and machinery, opening WDV. Asset purchased during the year on 16th August, 11th December, purchased and put to use and on 14th January for research which is approved by the Ministry of Technology. Purchased and on 31st yet to be used for the research program. Other assets depreciation. Brought forward items as per books, as per IT Act. Business loss, unabsorbed depreciation, loss from specified business. Assume the computation of profit of specified business as declared in P&L account is also the same for income tax law. Details of land sold. Sale consideration during the year. Land was purchased in 16-17 for 2.7 crores for a hospital product. It was shelved. Investment in bonds 54 EC before the specified time. Okay. No, it's not an exam question, but adjustments are similar in nature. Some of the adjustments will come. I am going to do this question in a format by which you can understand it easily, not the format you should follow in exam. I am going to do in normal computation what we will do, in math what we will do, so that you will understand the difference, how math and normal computation, where it changes. Okay. In both the cases, provision for taxation is added back. In both the cases, it is added back. We will keep this separately, 6.15, only for the normal working. Only for the normal working. We will keep this separately. We will adjust the brought forward loss with this, because loss brought forward can be adjusted only against this. Dividend, in both the cases, I will add it back. In both the cases, I will add back. In the first case, I will add back the whole of the depreciation, whereas in the second case, I will only add back the revaluation. இத ரெண்டு விதமா போடலாம். Add back the entire thing, reduce the post revaluation, or add back the only the revaluation portion of depreciation. I have added, okay, you can do it as add 16.35, reduce some 14 point whatever is the amount we are getting, okay, or the net impact is added back. So here I have added back the impact only arising due to revaluation, the impact that is arising due to revaluation. In both the cases, this is added back. In both the cases, this is added back. provision for gratuity. The interesting part is here only I will add it back. There I need not add it back because of XJ forging's case, where they have said provision for gratuity. Okay. Expenses incurred towards higher study of director's fund, no expenditure, same case law only. Okay, XJ forgings. Okay, because I have written the notes already, now I am taking a shortcut, but here this need not be added back. Here that is format based, 115 JB is format based, you need not add back. Technical fees paid to a subsidiary company, 8.1 lakh, but 5.2 lakhs is only fair market value. So first we will disallow 2.90 lakhs under 40A subsection 2, and then 30% of 5.2 lakhs because the tax has not been deducted at source. Are you understanding?
30% of 8.1.
No. What is allowable expenditure? 8.1 and allow pannena 30% of 8.1. You are going to disallow 2.9. So remaining is 5.2. Okay, of that 30% should be 5 point, yeah, 5 point. Yeah, somebody was asking me. Are you clear? 5, sir. What is allowable expenditure? இப்போ 8.1 க்கு TDS 30% புடிச்சிருந்தா நீங்க 8.1 அலோவ் பண்ணிருப்பீங்களா? அப்பயும் 2.9 டிஸ்அலோவ் பண்ணிருப்ப இல்ல. TDSன்றது என்ன எக்ஸ்பெண்டிச்சரோ அதுக்கு தான் 30. ஓகே, 30% of expenditure that needs to be allowed, not 30% of what is paid, because you are going to disallow 2.9.
TDS is for payment. No?
Yeah.
We understand.
Yes, sir. TDS is for any payment made. If there is a default, what is disallow? 30% of the amount paid கிடையாது, 30% of expenditure. ஒரு advance pay பண்ணிருக்கீங்க, which is going to balance sheet, on which you have not deducted tax. There is nothing to disallow. There is nothing to disallow. Only penalty can be levied, all those things. Okay, so it is only on 30% of expenditure, not 30% of amount paid.
Suppose expenditure is incurred for personal expenditure of a director. For that expenditure, TDS has been deducted. Will that be fully?
No, the full personal expenditure will be disallowed. Just because you are deducting tax, that's what I said. Cap scan case.
Yes.
Not deduct panna tax, but that is not the criteria. Expenditure allowed.
here in the case there is no TDS is not deducted, but there are some cases where this excess amount, like for example, 5.2 is the primary value, 8.1 is paid, and he has deducted TDS. So that 8 point, even though he's deducting TDS, doesn't grant immunity to him.
Yeah.
So in that case, that excess TDS deducted, like you are claiming it as an expense, not
You are claiming it as expense in the books of accounts. But under income tax law, that excess TDS will go to that person who received it.
so he first will income.
He should show 8.1 as income. He does not have the right to show 5.2 as income. Sir, you allowed to him only 5.2. So 5. No.
So the 2 point is taxed twice.
Twice, yeah.
Or he may
Or
refund the
he- yeah, refund he
2.9.
might get.
That depends. That depends.
Because they
That I am not saying that this should be. That you need to plan. Okay. Is very much an allowed expenditure. Legal charges for appeal proceedings are very much allowed as an expenditure. No change in that. No change in that. எதுவுமே மேட்டுக்கு இம்பாக்ட். மேட் இஸ் அ ஃபார்மேட். உங்களுக்கு தெரியும் எந்த 24 ஐட்டம்ஸ் வரும் மேட்ல. அதை தவிர யூ கேனாட் ஆட் அன் ஐட்டம். மேட் இஸ் ஃபார்மேட் பேஸ்ட் and it has nothing to do with disallowing an expenditure. MAT is what is MAT is levied on
Profit.
book profit, books of accounts, not books of income tax. Yeah, allowed. Only income tax, interest on loan taken for income tax is disallowed. Otherwise, payment of dividend is allowed. Diminution in the value of investment in both the cases disallowed. I missed out a point? Yeah. In this is that Pradeep Kumar Malhotra case, which comes in deemed dividend category. A director gave his own property as a personal guarantee for the company to obtain loan. Can he pay some extra benefits? The answer is yes. He cannot be treated as other directors. He is doing something extra than the other directors. So additional benefits can be provided to this director So it can be allowed, it can be claimed as a deduction. It can be claimed as a deduction.
What's the case?
Huh? Pradeep Kumar Malhotra. அதான டீம்டு டிவிடெண்ட்ல வரும், ரிலேட்டபிளா இருக்கும் இதுக்கு. %20 of the bonus is not paid within the due date because the employees are not traceable, so disallowed. This will not affect my 115 JB computation. Violation of 48(3) on a single day cash or payment made by unapproved modes, it will not affect my book profit computation. They are also into hospitals and they are just, it is abandoning new areas of treatment but resulted in a failure. They are not starting a new line of activity. In the same line of activity, they tried some new technique which has failed.
Here the problem is fully debited. No? We should disallow 4.
Yeah, I have added back 100% and allowed 1/5. 4/5 is disallowed. Yeah. The transformer is not owned by the assessee. It has been given to the state government. So it will be allowed because it is used for the benefit, not only employees, for the company's benefit as a whole.
That is the case law.
Infosys. Interestingly, even donation to PMNRF, you will not add back in the 115 JB because it is not there in the format. Even though you know it is not a business expenditure at all. Okay, but you cannot add it back there because it is not there in the format. None of this can be adjusted in 115 JB computation. Unfortunately, because the law never said, okay, take back incomes which are not taxable under this head. The law has given a format, we have to abide by the format.
So dividend also what we are giving that only needs add back in 115 GB.
Yeah, whatever we are providing.
But on the dividend, no effect. Dividend received, no effect. Kind of. இன்னொரு depreciation adjustment பண்ணும் இது முடியுது நான் இப்ப ஒரு பேஜ் இருக்கு
Are you so far clear? Scientific research expenditure, section 35, except cost of land, everything will be allowed. This will be allowed even if asset is not put to use. This will be allowed on approval basis. There is no requirement that the asset should be put to use. So these two assets, 8 lakhs is used for research, 3 lakhs is used for research, totally 11 lakhs.
Point
11 lakhs.
rupees in crores.
Yeah, 11 lakhs. 11 crores. 11 crores. But you cannot claim it under 115 JB because the format does not permit. Okay, இதெல்லாம் ரொம்ப interesting thing. Actually, in books of accounts, you cannot claim it as deduction also because accounting standard doesn't allow you to claim the capital expenditure as deduction. But income tax law, normal method you can claim, 115 JB you cannot claim. Okay. Most of it will be obviously. Yeah, income tax law is not written for you, it is for government. Okay. Depreciation. Okay. 40 crores. 40 plus 14 into 15%, 11 into 7.5%, all others put together 4.1 they have given. 40 plus 14 into 15% plus 11 into 7.5% plus all other put together 4.10. Is it correct?
13.025.
Yeah, tell me. Huh? Yeah. Yeah, valid point. Yeah, actual gratuity in our main thing. Yeah. I have not yet set off the business loss part of it in our normal computation. Okay. Business income before set off slash book profit check whether this is right. So obviously normal tax is going to be more because the difference is very, very small, very, very small. நான் capital gains எல்லாமே போடல நம்மளோட இதுல, but business loss has to be deducted. Okay, but book profit, why I did this question is to make you understand where are all book profit will have an impact. Okay, majority of the adjustments book profit will not have an impact. Whatever you are adjusting due to case law, due to some provisions, 40A3, TDS default, 40A2, all these things book profit will not be having any impact because that is a format only that 24 items will be taken care there. Am I clear to you? Am I clear to you? Now I am computing total income.
As per normal provision.
Book profit is over. While computing tax, again we'll have that. Now this is normal provision. $5.15 crores less ICOA, land was purchased in 1617. 2.70 into 317 divided by, can I know 1617 indexation? Financial year 1617 indexation. 260.
Four.
$60 lakhs.
Maximum is 50 lakhs only we can claim. Maximum is only 50 lakhs we can claim. Am I clear? I have not taken it as a specified foreign company because they have not said. They said only from foreign company investment, they have said. 15% of book profits. Book profit is 234.5 into 15%. So I see that the normal tax is higher. Normal tax is much higher. Okay. For a company, surcharge is applicable 7% and 12%. Income up to 1 crore, no surcharge. 1 crore to 10 crores, 7%. More than 10 crores, 12% is the surcharge. Okay. In this case, I find that the income is more than 10 crores, 228 crores. Yeah, okay. But that is anyhow, we need not calculate that because this is higher. Only if that is higher at the base level, I would have proceeded. Not an examination question, but 1 or 2 adjustments or even 4 or 5 adjustments from this. Okay.
One clarification. 15% profit you calculated from
Book profit
34,000.
2 crore 34 lakhs, right?
That
Into 15%. Yeah. You can adjust it along with your normal tax payable.
That is to the extent of difference between that and
Very good answer. By adjusting it, it cannot go below 35. By adjusting the MAT credit, you cannot go below the MAT limit. That is, MAT means minimum alternative tax. Suppose I have to pay 66 lakhs, 66 crores. 40 crores I have MAT credit. I cannot adjust the entire 40 crores. Because minimum 35 crores plus surcharge and HEC I need to pay. This is minimum payment.
so only 35 lakhs I can take.
You should minimum pay, for example, you should minimum pay 40.97. The maximum MAT credit you can take is the difference between these two, which will be 24 point or something like that. That is the maximum MAT credit you can take.
But whatever is coming after calculating, it's just only we have to.
Yes, sir. MAT means minimum alternative tax, not at the base level. Including says everything you should. Your relief will come here only. Yeah.
Suppose I'm having a market of 50 crores.
Yeah.
Now I have to pay as per cash calculation 40, assuming there's no income tax provision. I mean, there's like as per income tax provision, my tax payment is 66 lakhs. Okay. So now I have a MAT credit of 50 rupees. And current year MAT calculation is 40. Correct. So that 50.
You are taking some 26 or 25 point some as MAT credit, and the remaining you are paying is not MAT, it is only normal tax you are paying. Okay, normal tax, at least to the extent of minimum alternative computation you need to pay. The remaining 23 carry forward it and adjust it in the subsequent years.
Like in the 50, then you have to deduct this amount and balance.
Yes sir, yes sir, yes sir.
If the MAT tax was more, I would have received a credit.
Yes. If AMT, now we did AMT, the difference between, if the law itself says if MAT is payable, then the difference between MAT and normal tax is tax credit. Any doubts, friends? Okay. Just that you have touched upon all the provisions, nothing that. Messrs. Diamond Industries Limited, an Indian company, is engaged in assembling and manufacturing of automobile and auto components in Madhya Pradesh. The net profit is 9 crore 50 lakhs. Depreciation calculated on the basis of useful life of the asset. You would have made this adjustment, right? You would not have had any doubt in this adjustment, right? This is as per books of accounts. Okay. Donation 12 lakhs given to a political party by way of account payee check. GGB. You will add it back in PGBP and provide GGB. And provide 80 GGB. Yeah, tell me. You have a doubt? The company has paid 50 lakhs to a research institution recognized and notified by the central government, which has its object of undertaking scientific research. 100% allowed, no adjustment. No adjustment. Dividend received from a foreign company 15 lakh, in which it holds 30% of equity share. Income from other sources, 50 specified foreign company, so taxable at 15%. Taxable at 15%. Taxable at 15%. LTCG 4 lakhs on equity shares on which STT was paid both at the time of acquisition and sale. 112A. Okay. 1 lakh is not taxable. Remaining 3 lakhs is taxable at 10%. Interest of 10% per annum on 4 crores 20 lakhs being amount borrowed from State Bank on 1/6/2021 for purchase of machinery. The interest outstanding on 31/3/22 was paid only on 1/12/22. Disallowed 43B and allowed only in the subsequent financial year. Okay, but hold this point. Hold this point. We will come back to this. Profit of 8 lakhs on sale of plot of land to PQR Limited, an Indian company, the entire shares of which are held by Diamond Industry Limited. The plot, okay, 100% subsidiary, not a transfer at all. 100% subsidiary, not a transfer, so no capital gain. You will reduce the profit. Salary of 1 crore to foreign technician for installation of machinery at the factory of the premises was paid. Should be capitalized with the cost of the machinery before putting the asset into use for installation. For installation. ஒரு எக்ஸாம்பிளுக்கு கேட்கிறேன், இதுல டாக்ஸ் பிடிக்கல. Nothing. When the expenses itself is not allowed, there is nothing to disallow. No impact. Okay. The company sold automobile parts of 22 lakhs to Messrs. ABC, a sole proprietary concern, on 1/11/2019. On 1/2/2022, 12 lakhs was written off in the books as bad debt. The sole proprietor died on 1/3/22 and the company managed to collect 11 lakhs towards full and final settlement. The entire amount collected was shown as bad debts recovered and credited to the statement of P&L account. Yes sir, no impact. Sir, I sold 22 lakhs, sir. I wrote off 12 lakhs. Huh? Sir, once more, sir. Yeah. So, yeah. But this happened in 1/11/2019. Okay, okay. So, 1 lakh will be bad debts, huh? Yeah. So, no impact. I agree with you. No impact, but we'll check the answer also once. Whether dates na edha thappu pannirken nanu. Additional information. Depreciation as per income tax law. Addition made to the asset other than on the addition of the asset made during the year. So we need to. Addition made. Office building put to use on 15/12. So 5% we should claim. Computers 25 lakhs put to use on 11/5. 40%. Plant and machinery 5 crores installed and put to use on 1/1/22. 7.5%. I want to now go back here.
Manufacturing.
Okay. Interest. Interest at the rate of 10% per annum on 4 crore 20 lakhs being amount borrowed from State Bank of India on 1st June
6 months.
for purchase of plant and machinery. Now this plant and machinery is put to use on
1st January.
1st January. So, interest for the June, July, August, September, October, November, December should be capitalized. Adula disallow பண்றதுக்கு ஒண்ணும் இல்ல. ஏனா I have not claimed. Should be capitalized for that 7 months. The remaining 3 months, you know, the remaining 3 months you should disallow. Because it is not paid within the due date, 43B. In the 7 months ku add pannona, installation cost add panno. Remember, installation cost needs to be added and this needs to be added. You should claim normal and additional depreciation. You should claim normal and for that addition made. Claim normal also because they have charged it off as expenditure. They have charged it off as expenditure. They would not have claimed normal depreciation. Now I need to claim it. For that addition, in the 5 crores, they have claimed normal depreciation. Okay? Okay, they have not claimed other than on additions made. So we are only claiming normal and additional. The company had declared and distributed dividend of 12 lakhs. ATM. Intercorporate dividend. What is dividend received from specified foreign company?
15%.
15 lakhs, yeah? 15 lakhs. That or this 12 lakhs, whichever is less. Whichever is less. Compute the total income, assuming the company opts for concessional tax regime. You cannot claim additional depreciation, but you can claim ATM. You cannot claim additional depreciation. You can claim, and the turnover is 402 crores, 30% rate. 30% rate. Okay. இதான உங்களுக்கு எக்ஸாமுக்கு வந்ததா மே 22 எக்ஸாம்ல இது இல்ல ஆர்டிபியா மே 22 அப்போ Sir, salary to அது வந்து added to the cost of the machine. இல்ல disallowed இல்ல, added to the cost of the machine. ஆட் பண்ணலாம் சார். எக்ஸ்பெண்டிச்சருக்கு தான் டிடிஎஸ், அது தனி பெனால்டி நீங்க போடுங்க. ஆனா இதுல டிஸ்அலோவ் பண்றதுக்கு ஒண்ணும் இல்ல. Yeah. Yeah. That's not a problem, friends. That's what I'm saying. You can add. Sir, you can add to the cost of the asset even if tax is not deducted at source. You can add to the cost of the asset the interest even if it is not paid within the due date of filing returns. That doesn't change the provision in any manner.
But if this 1 lakh was paid in cash, then not added to the cost of asset.
If this 1 lakh is
Paid in cash.
yeah, not allowed, not allowed. That is specifically said in 32. I think it is in RTP. This question is just, I will check. இப்போ present RTP ன்னு நினைக்கிறேன்.
Recognize anything as asset. That will be paid in cash.
இதோ இருக்கு. Okay. This is RTP. RTP is nothing but past year's question paper தான். RTP காக இன்ஸ்டிடியூட் ஏதாவது எக்ஸ்ட்ரா எஃபர்ட் எடுக்குதுன்னு நினைச்சீங்கன்னா please wake up from your dream. Okay, right? So let us look into the answer without wasting time. Question number 17. Net profit, okay, depreciation added back, political donation. Look at the way they have written. Since donation to a political party is not wholly and exclusively for the purpose of business, it is not allowable under section 37. Since the amount of contribution is debited to the statement of P&L, it needs to be added back. So the institute has said, சொன்னு எழுதிடுங்க, என்ன வேணா எழுதுங்க, ஆனா கொஞ்சம் பெருசா எழுதுங்க தயவு செஞ்சு. Okay, 80 GGB claim பண்ண முடியாது, ஏன்னா we are going for optional tax reclaim. Optional tax reclaim. Okay, contribution to research, 100% of the deduction is allowed. Okay, however the company is opting for 115 BAA, it cannot be claimed. It cannot be claimed. Interest, இதுதான் நம்ம பார்க்க வேண்டியது. Interest on borrowings from SBI up to 1/1 being the date on which machinery installed and put to use is not allowable as deduction since it has to be capitalized as part of the cost of the asset. Interest for Jan, Feb, March is disallowed as per 43B since it is not paid within the due date. Since the entire interest has been debited, wholly they have disallowed this 35 lakhs under two different provisions. Anna, it is better to split off and show so that first 6 months or 7 months interest you are disallowing because it should be capitalized. Next 3 months the interest you are disallowing because it is now falling under 43B. Salary paid for installation of machinery added back. Na padikare. As per ICDS 5, expenses which are specifically attributable for bringing the asset to its working condition would form part of actual cost. Salary to foreign salary to foreign technicians for installation of machinery is a capital expenditure and not allowable. Since it has been debited to the P&L, it is added back. Okay. Dividend received from foreign company taxable under IFOS. LTCG on sale of equity shares, capital gain. Bad debts recovered. The deduction of bad debt allowed under section 36 was 12 lakhs out of the total debt of 22. Since the amount not with written off as bad debts is 10 lakhs, while the amount recovered is 11 lakh, only excess of 1 lakh would be chargeable to tax as business income. This is what I was, but நீங்க சொன்ன பாயிண்ட் ரொம்ப கரெக்ட். அது அட்ஜஸ்ட்மெண்ட்ல கரெக்டா இல்ல. நான் நேத்தி உங்களுக்கு சொல்லி கொடுத்ததுதான். See, if 20 lakhs is the total sale value, For example, okay. I wrote off bad debt 5 lakhs, which means 15 lakhs bad debts not yet disallowed. 5 lakhs only. Now I get 5 lakhs. It is not taxable because this goes here. So in this question, 22 lakhs is the sale value. 12 lakhs only I wrote it off as bad debt. Ana year tappu அவர் சொல்ற மாதிரி past yearsல write off பண்ணிருந்தா தான் write off. Current year write off, current year recovery na it's not logically sounding. Okay, 12 lakhs. Now I recover 11 lakhs. First 10 lakhs is towards an unapportioned portion. Remaining 1 lakh should only be treated as income. So they have added back 10 lakhs, though the entire 11 lakhs. But our sonna point correct. Probably the examiner, I mean the person who said this is not correct. Profit on plot of
36.
yes sir.
36 ஏதோ mention in this. In the note.
So, Indian dates.
Dates check.
Yeah, date check பண்ணலாமா?
Which one?
11, 19.
Same only.
22 lakhs a sole proprietor on 111. On 1/2/22, 12 lakhs was written off in the bad debts. On 1/3, the proprietor died and full and final settlement. So it is, the date has not changed. Now for your answer, sir. Yeah, I'm repeating it, sir. 15 lakhs is my sales to a person, sir. I claimed 15 lakhs as bad debts. Assessing officer only allowed me 10 lakhs, which means for 5 lakhs I have already paid the tax. Now I recover 7 lakhs. 2 lakhs the income. In the case in the 11 lakhs la enna solranga 1 lakh the income. And the 22 pay பண்ணலன்னு வரல ஏன்னா 19ல சேல் பண்ணது. The company sold 22 lakhs a sole proprietary concern on 1/11/19. On 1/2/22 12 lakhs was written off. There is pointless to write off only 12 lakhs when the entire 22 is with outstanding. Too many assumptions they used in this question. Okay, but for example, taking that out of 22 only 12 is written off. Now I recover 11 lakhs. 1 lakh the income. Ana in the entire 11 lakhs they have credited. So the solution says you should reduce 10 lakhs.
So 10 lakhs minus 1 lakh we have to add back.
No, 11 lakhs has been credited. So 10 lakhs minus panna podume. 1 lakh add panna. Automatic.
Right? The statistic would have been right if it was 1/2/21 or 20.
First they have to say entire 22 lakhs is outstanding. Then only it is logical. Otherwise it sounds really illogical that you will write off only 12 lakhs.
So 10 lakhs is credited before and 1 lakh is credited now.
10 lakhs is 22 lakhs is already considered as income in the year of sale. 12 lakhs you wrote it off. So income has become 10. 22 minus 12, 10. Now you recover 11.
So what that's
Profit on sale of plot of land, it is taxable under capital gain. Depreciation, office building, you can see 10%. Computers, you can see 40%. Plant and machinery, okay, sir. Ama sir, half done sir, 50%, 10% into 50%. 500 plus 100 plus 24.5 interest, okay, into 15% into 50%, 7.5%. No additional depreciation because you are going for 115 BWA. Okay, profit from business, capital gains, 100% subsidiary company, no capital gains, IFOS, okay, 80 GGB you cannot claim, whereas 80M you can claim. And that's how the income has been computed. Sir, the exam question. Okay, 75% of the adjustment you know. I am very sure 75% of the adjustment you know. Where you are that remaining 25% rarely in the உங்களுக்கு எக்ஸாமுக்கு வந்திருந்தாலும் you will know what to do with interest, installation, bad debts recovery, not very clear. You might have done a mistake, sir. Maximum bad debts recovery, you would have done a mistake. Okay, suppose somebody didn't read properly 115 BAA and provided 80 GGB also, you are not losing full marks. You are losing only a proportionate mark. Otherwise your answer would be correct. But sometimes that fear, because this question will run for 3 pages in our examination question paper, because of the font size and other things. So never worry about the length of the question. Believe on the knowledge you are having. Sir, we'll continue tomorrow, sir. Okay, we'll continue tomorrow morning 6 o'clock. I will complete REIT and REIT, assessment of companies and assessment of trust tomorrow. Okay, I'll send you a fresh schedule today in the group, sir. All the best.